Ladies and gentlemen, welcome back to the channel. Here in this video, we're going to go over everything that's currently going on with AMC, my expectations for this week, as far as major upcoming data. And this week is no shortage, or has no shortage, I shall say, of important economic data. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns before we go ahead and get straight into it. So first thing that I want to say is Ortex is not correct right now. There's something that is wrong based on what's happened with the reverse split and the share structure now. Ortex has not comprehended this data yet, so it might take a couple more days before you're actually seeing some live numbers over here. But some of the numbers do look like they are somewhat correct. So, estimated short interest of free float at 26.63%. That is likely still the estimated short interest of free float. I strongly believe that we are at a point where the short interest is likely 35 to 45%. It's going to take some time before we get a real exchange reported short interest number that actually looks like that. So Ortex estimating 26.63% makes some degree of sense to me. Free float out on loan is not correct. Shares out on loan says 16.89 million. That also does not look correct as well. Days to cover at 3.89. That also does not look correct. Utilization at 22.26% does not look correct. And cost to borrow fees 392% over the past 3 months. Your trailing average, that looks a little bit more correct to me. That is up 610% within the last 3 months. And if we look at the live short interest numbers, it gets even worse. 10.61% short interest of free float is Ortex's estimate. That's not true by a long shot, right? Again, we were seeing almost 30% short interest, and we've had the last couple of days just be an absolute shit show for AMC stock, just dropping like literally every single day by quite a bit. So these numbers are not true by the wildest imaginations. Okay, so just keep that in mind. I think a lot of people have been spooked by these numbers that are not true. They're going to jump huge once the real data actually comes in. So keep that in mind. And it does look like Interactive Brokers has 740% cost to borrow fees. Currently on AMC stock, cost to borrow max is 956.5%. If you take a look at right here, AMC is still on the threshold securities list. So that will be a story of this week, where you start off the week tomorrow on Monday at 11.5 million FTDs. Tuesday, you drop to 8.4 million. On Wednesday, you drop to 7.5 million. On Thursday, you drop to 6.8 million. And on Friday, you ramp up again from that low of 6.8 million to almost 7.2 million. And then for the next following Monday, you start off again at 7.7 million. So you're starting high this week, you kind of dip low, and you end the week going higher again, heading into the next following week. Hopefully that makes some sense. And I believe some point this week we will get more numbers for the FTDs. AMC will either remain on the threshold securities list or it will not. It really just depends if we see more FTDs come online. And just AMC stock being on the threshold securities list for like a month or two now, I believe it's closer to about 2 months. You know, these positions need to be closed out of, and there's no reason to not close out of them. So I do think this could have an impact on AMC stock. Obviously, it might not. Crazier things have happened, but definitely watch for that. And the option activity, the Stonko tracker data is not working correctly. But you're going to see a lot of bearish positioning, right? You're going to see a lot of puts in the money and a lot of calls out the money. That sets us up for potentially some upside buying pressure, just because it's so negative. When a situation is so negative in the options market on any particular company, it doesn't take a lot of good to send the stock up. And the option activity can really exacerbate that, okay? So that's something I will be watching for this week as well. I think if we just think about this logically, I broke this down a lot more in the last video, but we'll go ahead and break it down as well in this video. The situation has gotten far too bearish far, far too bearish. There is no logical reason to be this bearish on AMC. I get it, right? Things are not perfect. Things are not peaches and roses. AMC has the potential to dilute us massively. But does that constitute 3 20% sell-offs and 2 13+% sell-offs in the last 5 trading days? Every single day has been a huge down day. We haven't seen dilution. We haven't seen anything actually materially happen yet. So the markets have priced in a lot of bad news. So even when you get bad news, you probably bounce off of that. So in a weird way, if AMC did announce they came out and raised capital, maybe at the $18, $19 range or somewhere in that level, the stock might actually bounce because investors might say, hey, the dilution's over. We priced in a lot more than this, and there's not going to be a dilution for a while. Maybe this is the lowest the stock's going to be. We should start to cover out some of our short bets, or maybe even hedge out some of our short bets by going long on the stock. I think, just simply put, when the situation is this negative, it does not take good news to make the stock go higher. Don't forget that. Just like a bankruptcy company, stock will sell off months heading into bankruptcy. Once that bankruptcy announcement actually hits, there's a clear bet, right? When a company makes a bankruptcy announcement, it's either this company does go bankrupt or they actually figure something out to restructure and things will be okay, right? A lot of people opt to take that bet. This is the worst it's going to be. And that's why you see a lot of bankruptcy stocks actually, rally huge after their actual bankruptcy announcement. And obviously AMC is not going bankrupt. I've talked about this in the last couple of videos now. AMC is not going bankrupt, but it's the same kind of situation when everyone is so negative, expecting so many bad things. And then those bad things it gets to a point where you're pricing in so much bad. It doesn't take good news to get a bounce. And I think that's exactly what I'm expecting for this week. I think AMC could see a massive bounce this week. Based on what we've seen last week, obviously a very steep decline. And even in Friday and after hours, you were up about 1%. Now, unfortunately, Ortex is not aggregating the option analysis for us. But what we did see the last 2 days of last week was very bullish options being placed. We're talking 65 to 75% positive order values. This means that, instead of being 1 to 4% positive or not positive at all as far as option activity over the past couple of weeks, this time, the last 2 days or so, you're seeing more positive option activity rather than not. So that's a pretty good sign we're getting close to a bottom. Now, we haven't got any news. There really hasn't been anything that has come out over this weekend so far. The last articles put out and news stories are, 2 days ago. This one from 1 day ago where Wedbush upgrades AMC stock amid the stock conversion. And we talked about this already in yesterday's video and the last couple of videos. They actually lifted their sell rating and hit the stock with a hold rating and a $19 price target. Keep this in mind, guys. The stock is like $13 per share. The average analyst price target is $20 per share on a split adjusted basis. Pricing of what we would have seen the last couple of weeks or so, right, would be AMC at like $2 per share. So in those terms of prior pricing, you're at like $1.30. The price target for analysts was around $2, so that converts to $20 in today's pricing. That is a return potential of 61.5%. It's been a long time since long time since AMC was under the average analyst price target. AMC has always been much higher than analyst price targets, and 61.5% to even get to the average analyst price target, that is wildly crazy, okay? So I think you're in for a massive bounce this week. Simple as that. If AMC does announce they raise capital, that would be really good. Now, what could also be really good is if some of the economic data really goes in our favor. So you're going to have a lot of economic data that could move the markets pretty dang big this week. So Let's go ahead and go to Monday. We don't really have much for Monday. For Tuesday, you're going to get JOLTS job openings. You want to see this number come in as low as possible. If this plummeted like 1 million job openings, that would be great. That would be great news. You're expecting a decline of about 10,000 job openings month over month for the month of July, down to 9.57 million from 9.58 million last month. The lower the better. I think it's going to come in lower than 9.57 million jobs. So that's probably going to be a positive catalyst on Tuesday. On Wednesday, you're not going to get a whole bunch. You're going to get pending home sales month over month, year over year, PCE prices, corporate profits, things of that nature, but nothing too crazy. On Thursday, you're going to get personal income for July. You're expecting 0.3%. Last month's reading was 0.3%. Personal spending month over month, that's expected at 0.6%. Last month's reading was 0.5%. You actually want to see personal spending come in really good, because the higher personal spending is, kind of the better the economy is going to be doing, because people are actually spending money, right? That's what has kept us out of a so-called government recession so far. There's obviously an argument that we were in a recession in the first half of 2022, but this has kept us out of an official government recession because personal spending has been so good. Personal income coming in at 0.3% is okay. That is 3.6% annualized. It's outpacing the Fed's 2% inflation target. It's not terrible, but you really want to see this come in at like 0.2%. That would be the sweet spot. Core PC price index month over month, expecting that at 0.2%. Year over year is expected to rise from 3% last month to 3.3% this month. And I think the comps year over year are just a lot harder. So I think the month over month really does matter. And my daughter's just going to be loud here for the end of this video, most likely. So try to kind of exclude it out of your hearing. Non-farm payrolls for August, and I'm not going to apologize for her, but nonetheless, 8:30 in the morning on Friday. You're going to have non-farm payrolls at 170,000. Last month's rating was 187,000. So you want to see this come in 150,000. That would probably be the best case scenario. Around 170 would be pretty good as well. You just don't want to see this go too high. You don't want to see a 300,000 job rating. You also don't want to see a 100,000 job rating, or 50,000 job rating, or negative job rating, because then you're seriously begging the question of, are we going into recession? And nothing will do good if we have a recession. Okay, at least not AMC, at least not any specific stocks or sectors that you invest in. The unemployment rate for August as well comes out Friday at 8:30 in the morning, expecting at 3.5%. If this number goes up a little bit, not a big deal. If it jumps big, that's a problem. So, up or down 0.1%, not terrible. But if you start to move big, that's where you do get to, a problematic kind of point. And then on Friday at 10 o'clock in the morning, you're going to get ISM manufacturing PMI. You're expecting that at 47. Last month's rating was 46.4. So you're actually expecting manufacturing to get a little bit better in this next rating, guys. So there is that. Now, on these videos on Sunday, I like to make price predictions. I think that's very hard to actually do, just based on where AMC stock is at right now. But I'll tell you right now, odds are the stock bounces big. The stock could bounce to as high as $22, $23 per share, in my personal opinion, this week. The stock could almost double this week. That would be getting back to the analyst price targets of $20. And that would be an increase of, again, about 61.5%. I don't expect downside from here. If we do get downside, $12 per share is going to be hopefully a strong level of support. And you're right about at that right now. $12.50 is going to be another support level in which you bounced off of in after hours on Friday, closing the after hours session at $12.56, up 1.05%. But I do expect a very large bounce. So I don't know how big we could bounce. You could bounce up to $30 some. But at least a bounce to the low 20s looks dang likely to me. If we bounce to 19 or 18, that's also a possibility, and that would be great news compared to where we are right now. So I think the highest likelihood is to end the week around the 20s, right? 18 to really $22. That's my range that I'm expecting. If things were really bad this week and the markets do sell off, there is a possibility that we fall to $12. But I don't see us going lower than that. So your risk to reward has gotten a lot better as the stock has been falling. So even to take on some of those option bets or some of those leverage trades, that looks good to me. I'm not a financial advisor. I'm not a financial planner. Do not trade based off of anything I say. Come to your own conclusions, all of that. But this is kind of what I'm thinking about for this week. If you guys want to come trade with me live in real time, link down below in the description of this video. You guys enjoy the rest of your day. Let me know what you think about this down below in the comments section. Yeah, and I will see you in the next one.